Yo, welcome back to another episode of Invest in You. In this video, we're going to be looking at how to invest and not pay tax. Like, I'm not trying to teach you some sneaky stuff, but in this episode, we're going to be going over how to invest for a certain amount and be tax free. Okay, so the secret to investing tax-free is a tax-free savings account. Now, if you're not in South Africa, then don't worry, a lot of other countries also do tax-free savings accounts or tax-free investing accounts. So just find out what your country does and you can do it. So, tax-free savings accounts. What is it? So, South Africa in 2015 started this amazing thing where they allow you to invest money and pay no tax on it. No tax withholding on dividends, no investment tax, no capital gains tax, nada, zero, mahala. Like, how great is that? So tax-free savings accounts are great because immediately your returns and your growth is yours. And the big thing is you're not losing out to the taxman, and he's not taking anything from your very good investments. Now, one thing you have to know about tax-free savings accounts in South Africa is you can only invest in unit trust or ETFs, so you can't invest into mutual stocks. But in a way, it's amazing because ETFs are a lot more diversified, a lot less volatile, and just are much more insured of giving you very nice returns in the long run. Now, remember, tax-free savings account is a long-term investment, and I'll tell you now why. So when you invest into your tax-free savings account, make sure that you won't need that money in the next year or 2 or 5 or longer if you could. So sounds too good to be true. Well, there is actually 2 catches. So it is limited to the amount you can invest into this account. So every individual can invest up to 36,000 Rand per year. And over your entire lifetime, you can invest up to 500,000 Rand. Now, the thing is, these limits can change. Like, it used to be 33,000 Rand, and then the government increased it. So there is a possibility of it increasing or with inflation and stuff like that. So just always keep tabs on what the limits are. But the big thing about this, guys, now this is very important. The moment you go over that limit, the moment you go over that 500,000 limit or the 36,000 a year, you will be taxed 40% on the amount you go over. So don't do that, because 40% is a lot. And please, the most important thing, and a lot of the times I hear this, and this is where a lot of people go wrong. So once your money is put into your tax-free savings account, don't draw it out. Because let's say you put 1,000 Rand in and you decide you're going to pull out 1,000 Rand in 2 days time again. That 1,000 Rand has contributed towards your limit and you don't get it back. So just because you took 1,000 Rand out of one of your investments now does not mean you can invest another. So let's make it simple. Let's say you've invested 36,000 Rand. Now you pull out 5,000 Rand, and that does not mean you can now invest 5,000 Rand again that year, because that 36 has already been met. And that's why it's very important. That's why I'm saying tax-free savings accounts are long-term investments. So once you reach that 500,000 cap, let it sit. Just let it be there. Because if you pull out the money beforehand, you can't put more money in again. And that is very important. And the big thing about the tax-free savings account is why it's there. It's the government actually, for a change, trying to help us and trying to get us to save our money better. But obviously they don't want you to make tons and tons of money off of it and they don't get anything out of it. That's why they cap it. And you can have multiple tax-free savings accounts. For instance, I could have a tax-free savings account through my bank, but I also have one on EasyEquities. But it's your responsibility, no one else's, your responsibility to keep track of how much you have in each account so that you don't go over those limits. Because trust me, like, SARS will be on you the moment you go 1 Rand over. They'll take 40% of that 1 Rand you go over. Trust me, that's SARS. And one of the big things also that I like about EasyEquities is EasyEquities does not have those limits to the amount you have to invest per month. For instance, if I invest with FNB into my tax-free savings account, I have to put in a minimum of 300 Rand a month. Now, for someone who doesn't have 300 Rand a month that I can just chip off because no salary, student life, you know, it's amazing because now I can invest 10 Rand a month or 50 Rand a month. So there's no limit on EasyEquities, which is amazing. Now, a lot of the times I get the question, but listen, what's the difference between a tax-free savings account and me just waiting until I reach the cap of capital gains? Now, yes, in South Africa, you get tax exemption up to 40,000 Rands worth of capital gains. But now remember, you're still paying investment tax, you're still paying dividends withholding tax, so it's still a lot of money coming off. So, and the great thing about this is, once your money is in your tax-free savings account, that does not take tax at all. So it's just gonna grow and grow and grow. And I mean, if you look at this graph, you can see the difference as to when you are paying tax and when you are not paying tax. So yeah, guys, like I would definitely say tax-free savings account, if you are like early, like young still, and you ranging from the age of 0 to like 30, tax-free savings account is definitely a very good way to go, because it's money you're going to put in and you're going to forget about it, and it's just going to keep growing, and then that day you want to retire, it's going to be tax-free. Like, how great is that? So it's definitely long-term, and that's what I'm saying. Make sure the money you put into that account is not money that you're going to need as an emergency fund. Your emergency fund is separate. And that's it, guys. That's pretty much all it is about a tax-free savings account. Like, it's really not that complicated. The big important thing is you have to remember your limits. You have to not pull out if you can. The big thing also is just remember it's only ETFs, and I typically would say a good amount of ETFs to have in your tax-free savings account is anything in the range from 6 to 10. That will give you a good anchor and a good diversification. You can have less than 6, don't just follow me. But I always like, because 6 to 10 that means I can cover pretty much all the industries that I think will do good to my portfolio. But yeah, guys, if you like this video, like, subscribe, comment down, and thank you again for watching, and stick around for my post-credit Tesla C. Okay, it's Tesla earnings call coming up on the 21st of October. They have released some record-breaking deliveries and production results from their Q3, and I just love it. Go do yourself a favor, go look up, I'm not going to say his full name because I might be sued by him, I don't know, but there's this bloke called Gordon. He got fired from his previous job for being factually incorrect. Well, mate, it's a regular occurrence. Like, he is factually incorrect about everything. So he's one of the biggest Tesla bears out there, and he's been wrong for so many years, like since 2017, 2020 FTSE, so like, he's just wrong, and I love it. Like, he said, for instance, at the start of this year they interviewed him, and they asked what's his take on this year's financial year for Tesla, and he said Tesla will have a horrible 2020 year. And I mean, Tesla's the only car company this year that's actually done good, that's actually broken records, and he is one of the biggest people who always said, oh, Elon Musk promised this 500,000 deliveries and he'll never make it, he can't do it. Mate, watch the earnings call. Like, he's definitely, so there was a leaked email where Elon tried to push his employees and told them, like, listen, in between the lines, we kind of already reached the 500,000 deliveries or 500,000 productions. Let's push on. Let's try and push it even more over. So, Mr. Gordon, you're in for a treat. And he's probably going to have some lame-ass excuse again, looking back at the fundamentals and whatnot. Shame, Gordon. Shame. But yeah, guys, so watch the earnings call. It's going to be groundbreaking profits. And yeah.